This video is made possible by Trends. Trends is the ultimate knowledge hub from The Hustle. Trends is a networking community for entrepreneurs and budding entrepreneurs. It's a place where you can connect and even workshop with investors and founders who can share valuable insights to help get your ideas off the ground. Trends brings together expert knowledge, data science, and investigative journalism to track new industries and likely trends. Remember our video about the surprising success of A2 milk that outstripped tech companies in profits in 2019? Well, over on Trends, you can find in-depth trend analysis on the alternative milk industry, as well as detailed reports on loads of niche markets that could really help you capitalize on your own ideas. Or maybe you're stuck for ideas. Dive into Trends' exclusive research with intriguing topics to help inspire, like the 30 companies defining the future of media and pop culture, or data on thousands of successful Kickstarter projects. We also like the live weekly lectures from founders who give practical tips about everything from internet security to branding to getting the most out of YouTube. Hey, you're never too old to learn something new. Best of all, right now, you can get your first 2 weeks for just $1. Go to trends.co/VisualPolitik for your $1 2-week trial. Now, let's get into the video. It is said that there are 2 challenges you should never enter into with a Swiss national. One is skiing, and the other is money. Despite having just over 8.5 million inhabitants and being nested amongst tranquil mountains, the Swiss Confederation, with a GDP of over $700 billion, has become not only one of the richest countries in the world, but also a safe haven for the planet's great fortunes. And I'm not just talking about money, banks, and financial investments. It goes a lot further than that. For example, Switzerland is also home to the largest art deposit in the world. We are talking about a country where we can even find initiatives such as the Brunig Megasafe, a project that involves drilling into the Alps to build huge secure vaults where all kinds of valuable objects can be stored. But hold on, in this video we are not going to focus so much on the Swiss economy, but rather on a very odd institution that in recent years has become an important player in the global financial market. I am referring to the Swiss National Bank. Yes, that's right, the Central Bank of Switzerland. A central bank so unusual that it's even listed on the stock exchange. Yes, that's correct. It is quoted as one more stock on the Swiss Stock Exchange. In other words, you could personally invest in the Swiss National Bank and become a shareholder of the Central Bank of Switzerland. Curious, don't you think? But that is by no means its only peculiarity. Did you know that the Swiss Central Bank has invested more than $170 billion in shares of companies such as Apple, Amazon, Facebook, or Alphabet, among many others? Did you know that there are even academics, analysts, and professionals who consider that the Swiss Central Bank has become one of the largest hedge funds in the world? In this new video that we have made in collaboration with Value School, we are going to give you all the details. So, let's get going.
A different kind of bank.
Dear friends of VisualPolitik, please pay attention to the following headlines.
March 2nd, 2020, Swiss National Bank posts $50 billion profit on boost from Apple and Amazon and company. Windfall makes Swiss Central Bank one of the world's most successful investors in 2019. May 11th, 2020, Switzerland's central bank bought up Apple, GE, and Disney stock. It also loaded up on a marijuana stock.
Yes, I know it seems like news from a mutual fund or a hedge fund, but we're talking about the Swiss Central Bank, an institution which, like the European Central Bank in the Eurozone or the Fed in the United States, has the main role of setting the monetary policy, issuing the national currency, in this case the Swiss franc, and managing the country's gold reserves. That is the usual task of central banks. However, as you can probably imagine, the Swiss National Bank has certain characteristics that make it quite different from other central banks. First of all, it is a bank that does not belong to the state and whose share price is quoted on the stock exchange. And that, how can I put it, is far from usual. A closer look shows us that the capital of this bank is made up of 100,000 shares. 45% are held by the different cantons that make up the Swiss Confederation. Just a side note, the cantons are kind of autonomous regions with a lot of self-government. They set their own taxes, their rules, their regulations. In practice, they are almost small states that together form a kind of union, the Swiss Confederation. But let's continue. So, the various cantons share 45% of the central bank's shares. A further 15% is held by smaller local banks that also belong to the cantons, leaving the remaining 40% to float on the stock exchange. In fact, the bank has been listed on the Swiss Stock Exchange since 1907. So yes, without any problem, you could become a shareholder of the Swiss Central Bank. You can buy its shares just like you would buy those of any other company. However, these stocks are a bit unusual. Let's just say that the rights of shareholders are somewhat limited. You see, ordinary shares of the Swiss National Bank do not have voting rights. In the event of the bank's liquidation, the shareholders would only receive at most the nominal amount at which the shares were issued, 250 Swiss francs per share. And what's more, by law, the shares can only pay a maximum dividend of 6% on the share capital, which is 25 million Swiss francs. In other words, shareholders can at best only receive 15 francs per share in dividends per year. And so, if we consider that the shares are currently quoted at 5,300 Swiss francs each, that means that the dividend yield that shareholders receive, which by the way is practically the only return they can get from this bank because the accumulation of profits does not belong to them, is 0.28% per year. Yes, 0.28% per year. It certainly doesn't seem like the best investment in the world. These shares behave more like a kind of very secure perpetual bond. That is why the market value of this bank is only about $600 million. But hold on a second, didn't we tell you at the beginning that this bank made a profit of $50 billion in 2019? So where does all this money go? According to the National Bank Act, which is the law that regulates the operation of this body, these profits are accumulated in the bank's reserves, which are gradually released both to the cantons and the federal budget itself. In 2020, for example, the cantons will receive 2 billion Swiss francs from the central bank, and the federal council, that is, the federal government, will receive a further 1 billion. All in all, some $3.3 billion. And in other words, in the case of the Swiss National Bank, business is not done by the shareholders. But then what's the point? Why dedicate a whole video to the workings of this bank? Well, my friends, because the Swiss National Bank has another very special feature that has a lot to do with the strength of the Swiss franc and the country's economy. So, what is it? Let's take a look.
Everyone wants Swiss francs.
The Swiss franc is a very special currency. Although it is a fiduciary currency, virtually everyone trusts it. This explains why this currency plays a very significant role in world finance. Let's just say that every time there is an economic crisis or an international financial crisis, the Swiss franc becomes one of the most sought after havens. When there are problems or trouble brewing, everyone wants to have their money in Swiss francs. In a way, at the currency level, it plays the same role as gold. For example, after the financial crisis of 2008, demand for Swiss francs soared. This has also been the case with the coronavirus crisis. And the question is, why does the Swiss franc play this role as an active refuge? Why do investors feel more secure putting their fortunes into Swiss francs in times of fear or stress? Well, let's say that there are two explanations for this. On the one hand, the strength of the Swiss economy, which we'll talk about later, and on the other hand, the historical performance of this currency. Over the last 5 decades, the Swiss franc has almost doubled in value against the dollar and even more against other major currencies such as the euro, pound, and yen. For example, in August 2000, the market was giving 1.83 Swiss francs for every US dollar. At the time of making this video, you would only get 0.9 francs for every dollar. That's less than half. Of course, there is one problem with so much demand for the Swiss franc. If the currency appreciation is very rapid or abrupt, the export industry may have problems. And friends, believe it or not, Switzerland is one of the countries with the most exports on the whole planet. Each year, Switzerland exports goods and services worth more than $400 billion, a figure that accounts for more than 65% of its GDP, which makes Switzerland a much bigger exporter than, for example, Germany. So what is the Swiss National Bank doing to avoid very sharp revaluations of the Swiss franc? Well, to start with, it tries to curb demand by setting the lowest interest rate in the world. The official interest rate in Switzerland is negative 0.75%. And since that is not enough, and people still want to buy more and more francs, then its second measure is to expand the supply, that is, to issue many, many new francs. Pay attention to this fact. Let's break it down. Since 2002, the balance sheet of the Swiss Central Bank has increased almost eightfold. In other words, the central bank has increased the number of Swiss francs by hundreds and hundreds of billions of dollars, by the equivalent of just over $850 billion. And in fact, this explains why today its balance sheet is equivalent to 135% of the country's GDP. This makes it, in relative terms, the central bank with the largest balance sheet in the world. And here, friends, is where we come to the key issue. As we have seen, the Swiss National Bank is issuing new francs to meet the huge demand. That is, it creates huge amounts of new francs to be sold to investors in exchange for dollars, euros, pounds, yen, etc., etc. And the big question is, what on earth is the Swiss bank doing with that amount of currency? Listen up.
A national treasure.
Friends, thanks to the enormous demand for Swiss francs, the Swiss Central Bank has accumulated the equivalent of $950 billion in foreign currency as of June 2020. And what do you think it has done with such an amount of money? Well, it hasn't left it sitting idly. It has started to invest all over the world, particularly in the United States. Approximately 90% of all foreign currency reserves have been invested as follows. Most of it, some $665 billion in debt from countries and large companies. And the rest, some $170 billion, has been invested directly in shares. In other words, the Swiss National Bank has shares in the world's leading companies amounting to some $20,000 per capita. Impressive. To give you an idea, on August 5th, 2020, these were his three main positions. In other words, the Swiss Central Bank has become something of a huge investment fund. The best thing is that all these positions are financed with new francs, with the issue of new currency. This is what is popularly known as printing banknotes. Who needs oil when you can have Swiss francs? The fact is that, thanks to the huge international demand for Swiss banknotes, the central bank is able to issue more and more francs. Francs which have ultimately financed the creation of an immense national treasure. And something that is even more surprising, today, the Swiss franc is not only supported by the Swiss economy, but also, increasingly, by this huge portfolio of investment in the best performing companies around the world. Investments which, as we saw at the beginning, are already bringing enormous benefits to the Swiss economy. In 2019 alone, $50 billion. It is a move, an experiment that is unprecedented and has led many analysts and academics to start to consider it a large hedge fund. A hedge fund that sells francs, goes short on francs, and goes long on shares and debt securities. But at this point, the question is, how far can the Swiss take this strategy? Let's take a look.
Finest Swiss style.
In order for this whole game we've outlined to work, the demand for Swiss francs needs to remain very high. In other words, for savers around the world to continue to see Switzerland as a safe place to deposit their money. And here the competitiveness of the economy and the solvency of the public accounts are key. The more investors trust, the greater the demand for Swiss currency will be. This will allow Switzerland to continue to sell francs and buy shares and debt securities that generate a return. What a business! Printing paper, selling it, and having people buy it almost as if it were ounces of gold. And you know what? At the moment, it seems like the numbers are holding up. Public debt is low. The government is financed at negative rates. Their economy is doing reasonably well. They have practically full employment. Their taxes are moderate. And on top of that, we can find news stories like this.
Swiss region may soon beat Hong Kong as best company tax haven. Hong Kong will soon lose its status as the place with the world's lowest corporate tax, replaced by the small mountainous canton of Nidwalden in Switzerland. Bloomberg.
Switzerland is currently carrying out one of the most significant tax reforms in decades. Many cantons are drastically reducing the tax burden on corporate profits to attract more investment and encourage business growth. Of course, the country also has some problems, but lucky problems. The fact is that the strategy followed by the central bank has aroused so much interest that some academics are already wondering whether it would not be appropriate for the Swiss government to take advantage of its ability to finance itself at negative rates, to issue large amounts of debt and use this money to create its own sovereign fund. Anyway, as we said at the beginning, in matters of skiing and money, it's best not to mess with the Swiss. In a nutshell, my friends, this is the amazing story of the most unusual central bank in the world. Now, if you've found this video that we have prepared in collaboration with Value School interesting, don't forget to click on the like button and subscribe to VisualPolitik. Take care, I'll see you next time.